We appreciate you coming back with us on another edition of the Twin Cities Real Estate Pros podcast. My name is Ron Johnson, licensed real estate agent with RE/MAX Advantage Plus, joined as always the co-host of the show and the leader of the Imperial Home Team. That's a pretty big introduction.
I know.
David Nelson, also
No pressure.
licensed real estate agent with RE/MAX Advantage Plus. Today on the show we have Rob Satrom. He's from Nuance Financial. We're going to chat with him a little bit about some financial benefits of buying a home. We'll also talk about some accounting practices that could help you with taxes when you're buying a home, tax benefits, as well as some investment opportunities that may be there as well. But first, quickly, before we get into that, David, you want to talk about a pre-list that you have coming on in Lakeville.
Yeah, and I foresee this one selling quite quickly. Again, since it is a seller's market, no surprise. It is an end unit townhome in Lakeville. It's at 18322 Kerrville Trail. It's in the Prairie Lakes Lodge neighborhood. As of today, Tuesday, there's no other end units for sale right now. So it's a hot commodity. 3 bedrooms, 3 bathrooms. There's a master suite, and the cool thing about being an end unit, you've got a whole wildlife is really in your backyard. So it's complete privacy, end of the cul-de-sac, and that's going on under 200.
Wow.
Yeah. So we expect that one to sell pretty quickly. It's going to be at 194,900, and just off the interstate, great access. Could be a rental, could be for really anybody. So, and I'll have all the photos on Zillow, also on the podcast. Make sure you go to our website, twincitiesrealestatepros.com, because I'll have more photos on there as well, so you can check it out.
Okay, and of course, I think today, March 15th, is that right, as we record this here? And so who knows when people are listening or watching, so there'll be more updated information by the time people get to this, obviously.
Exactly.
Okay, and I just want to real quickly talk, I was running around in Lakeville on Sunday with a brand new buyer who's looking for main level master suite, so a full bedroom upstairs on the main level, and then full bathroom, obviously as a suite connected to that on the main level. It doesn't matter necessarily where the other bedrooms are, whether they're up or down. She's looking at about 425, 475, right in that range, somewhere in Lakeville. So a main level master suite in Lakeville. So if anybody's got one of those, I'd love to hear about it, and they can contact us here at TwinCitiesRealEstatePros.com.
Wow. Yeah, that should be.
Yeah. So go ahead after the show and dig one of those up for me, and we can.
I'll see what I can do. I'll release the hounds and see.
But in all seriousness, part of the purpose of this show is that people are listening or watching us on YouTube at ImperialHomeTeam.tv. If you've got something that sounds like what we're talking about, go ahead and get a hold of us.
Please do.
We can do a market analysis for you, let you know how we can get it marketed. So if you're like, well, that kind of sounds like my house, go ahead and get a hold of us.
Yeah, and again, I can't say this enough, and I hate harassing everybody, but it is a seller's market. And even this townhouse that just signed up, yesterday, the 13th, there's already interest in it, and only possibly 7 people know about it, other than you, the exclusive listeners and watchers. So when there's houses priced right and, in good shape, in the whole Twin Cities, not just Lakeville, but the whole Twin Cities, there's buyers waiting to burst down your door and throw cash, just tons of money at you.
Yeah, I was actually pretty surprised. We sold our townhome last, in the fall here, and a guy that lived across the street from me just posted on his Facebook page that he was so excited that he had just sold the same type of unit that we had, a nice little townhome. That townhome living is amazing.
Yeah.
But I asked him how much he had sold it for, and it was bad for me, good for him, but $20,000 more than what we had sold ours, and closing costs were included and everything, and I think it took them about a week to sell it. So pretty encouraging to see that the market's good on those townhome units too, that I know back in 2008 and 9 were a little depressing to be sitting on.
Yeah, it is. So that voice that you're hearing is Rob Satrom. He's from Nuance Financial. So tell us a little bit, first of all, about yourself and Nuance.
Yeah, absolutely. So Nuance Financial Tax and Accounting is a small boutique accounting and bookkeeping firm. Our real focus is that we help entrepreneurs, small businesses, focus on what they do best. And our whole idea is to serve as an outsourced accountant so that people can do what it is that they're best at. And that's our mission. Our purpose is to help people save in their taxes and just maximize every effort that they do, particularly for small businesses. And then we also like to help people build just financial operations in their businesses so that they last for generations. So that's kind of our mission and our purpose. And what that can really look like is a lot of times entrepreneurs tend to be the type of people that go out there and are pushing a rock uphill. A lot of the times they're facing rejection all day. I don't know if you guys ever have to do that.
Never once.
Never. What's no?
Yeah. And so what we found is that personality really flourishes when somebody takes over kind of the meticulous, time-wasting accounting stuff. So what we'll do is we'll do tax planning, we'll do accounting, bookkeeping, and payroll. And the idea is just to let entrepreneurs, small businesses, medium-sized businesses do what they do best. So there's 3 of us, and we're out of the office here.
All right, so we'll talk about what that means for the housing market in a second, but go ahead and I guess promote yourself a little bit. We assume there's other real estate agents listening to this show, and obviously one of the entrepreneur type people you're talking about that you can help out are real estate agents, so they can concentrate on selling homes, marketing themselves, and not necessarily worrying about the checks coming in.
Yep. One of the things that we've noticed, if you're a real estate agent and you have a tendency to not exactly understand how much your taxes are going to be at the end of the year, maybe you've got a car full of receipts, or maybe you haven't been on top of understanding everything, or if you haven't done the due diligence to find out if you should incorporate. We bump into a lot of real estate agents that make massive amounts of 1099 income. They're making commissions, and they don't know all of the strategies available, whether it's through an S-corp strategy, where you take a payroll and a dividend, which can mitigate your self-employment tax, which is 15.3%. If you can mitigate that tax, that's good. Or if you're just looking to get the most optimal retirement plan out there. So entrepreneurs have an amazing opportunity that your regular just W-2 tax situation doesn't have. You can do things like SEP IRAs. There's some incredible things you can do with solo 401ks if you're a single owner, S-corp or LLC, which now I'm talking all technical, but basically you can save a ton in taxes. So what we'll do is we'll do an in-depth analysis on people for free. We always do a no-cost consultation. We love connecting with realtors and just say, hey, what are you working on? Where do you want to be over the next 5, 10, 20 years? And then how do we help you reduce the biggest bill in your world? I mean, you're not going to have a bigger expense than taxes.
Well, and I can vouch for whatever Rob says. I was in the same boat not too long ago. Here about this time, I was sweating bullets because all of a sudden you get this massive tax debt that I did not prepare for, flying by the seat of my pants. You know, and again, I had a box of receipts, Amazon receipts, whatever. It was scary. So with what I've done is actually hired Nuance Financial, and it's so peaceful knowing that this time of year, that's all been taken care of. My taxes are taken care of. Also, I became an S-corp, which did reduce my tax
Pretty
debt.
helpful.
And the biggest thing too I found is government doesn't like you commingling with your funds. So if I have a personal bank and I'm paying for my real estate services as well as my mortgage, my car, going out to eat, it's really hard for the government to say, hey, that's personal, that's business. But when I had my own business account, it's so easy because they just take your business credit card, your business checking account, and before you just keep your business separate with your personal, and then Nuance just kind of handles it all and bundles it up in a nice little package and mails it off to the IRS.
Yep.
That easy.
It's simply, it's just that easy. You set it and you forget it.
Yeah, it's pretty nice. What's encouraging for us is that my business partner, Nick Meester, and then my other business partner, Ed Reese, are both experienced accountants. Nick was actually a CPA at one of the biggest, schwankiest CPA firms in downtown Minneapolis called CBiz. He was there for 7 years, and his big claim to fame was that he once held a $20 million check written out to the IRS, which he had actually helped mitigate tremendously. A gentleman had sold his business, and Nick had to be involved in that. So what's pretty cool is that him and Ed both have a ton of experience helping some pretty substantial cases. So there's pretty much nothing that we haven't seen or that we can't handle, which for me as the consultant is fun to be able to connect to the needs of our clients. It's pretty fun to have a good product. So yeah, things are going really well. We're out of right off of Kenwood Trail here, and if you go to nuancefinancial.com, request a free consultation. We'll just have a cup of coffee and hear what it is that you're working on. And in particular, real estate agents, you should be playing offense and doing some fun things.
And so really, real estate agents, independent insurance people, financial advisors, any small business owner, all those types of people are the kind of people you're targeting.
Yep. Another cool niche for us is actually if you're a small nonprofit even, or if you know a nonprofit that maybe has a volunteer accountant. Both Nick and I worked up at Eaglebrook Church on the north side of the cities, which is the 8th biggest church in the United States. and Nick actually ran their entire accounting department. So what's kind of fun is that not only can we help small business owners, but we can be that just very sound accountant that upgrades your trustworthiness. It's really empowering for small nonprofits not to have just somebody doing their bookkeeping, but to have an actual CPA doing it. So that's been another fun little niche. But yeah, any business owners, and if you just want a tax return done too, a lot of business owners here in Lakeville have great accountants that they hire, and we can just help you do your really detailed tax returns too. So.
All right, and let's tie this back into the housing market. So tax benefits is one thing, kind of I guess a catchphrase when people are talking about buying a house. Can you kind of get into some of that, the tax benefits of actually owning a home?
Yep. Well, the most basic thing is that you're going to be able to deduct your interest that you pay on your mortgage. So that's the top thing. The other thing is when it just comes to behavioral finance as well, being able to have an asset that's going to be hopefully appreciating in value, but rather than just renting, owning a home, I like to call it your real nest egg. A lot of folks don't fully understand until they get into their 50s, their 60s, and even later in life that home that you own actually ends up being a huge part of your asset. And when you dial in a retirement plan at the end of your not the end of your life, but when you're really trying to figure out what it is
before that, it would help.
Exactly. When you're trying to figure out what it is that you want to do, a home is a tremendous asset. So when you're purchasing, being able to write off that mortgage interest is very good, but just fundamentally owning a home is a good move financially, which I'm sure you guys like to hear.
Yeah, definitely. That's another reason why we can tell people to buy homes. And I want to ask you just, I guess, on a personal situation, but I know a lot of people are in a similar situation. I bought my first house in 2005. I still own that house today. And I rent it, so I have that as a rental. And then we bought another house. So, and people found themselves in that situation where you just couldn't sell your house because you bought it at the top of the market and you're just way underwater. It just isn't going to make sense because you have to pay, realtor fees and you have to pay people like David and things like that. But in all seriousness, owning a rental property versus, and I'm going to put you on the spot here a little bit, owning a rental property versus just selling your home, some of the tax benefits and implications there.
Absolutely. Rental real estate is one of the most beneficial things that you can own. Now, we always like people to do their due diligence first, make sure that you're paying off your debt, building up cash reserves. We're the Dave Ramsey endorsed local providers around here. And you'll just hear us say it ad nauseum that we want people to dump their credit card debt, get rid of all that consumer stuff. Once you've built up a little bit of a nest egg too in terms of a retirement plan so that you can take advantage of compounding interest. Compounding interest is good. Then start focusing on rental real estate. But when it comes to real estate, there's a couple amazing things that happen. First of all, our markets, the stock market's unpredictable right now. If you keep up on the markets, we've basically taken the Federal Reserve and we've pumped dollars into our market, and things have headed upwards for a long time. And when the markets get inflated, usually there's a correction that's going to come, right? So the first risk that rental real estate actually offsets is called market risk. Just the whole idea that when the market goes down, when the market tanks and people feel poorer, or if they actually are poorer, usually what happens is they have a harder time coming up with down payments for homes. We would hate that to happen to you guys. We want to sell lots of houses. But what'll happen is you'll actually see an increase in rents. So if you go on some of the websites that are out there from the housing commissions and whatnot, rental rates stayed almost the same during the 2008 to 2010 hiccup that happened, and the average rent actually went up a little bit. Vacancy rates are obviously a huge risk when you rent something out, and maybe I should back up. The real basic part of owning rental real estate is that you would either become a landlord by accident, exactly. Like you mentioned, There's a lot of folks like that. But then if you were to take portions of your money, buy a property, then you would rent it out, obviously. You get a paycheck every month. But the tax is actually, that income is going to be called passive income, which is totally different than your regular income. So there's a lot of benefits there. So having rental real estate can dampen your market risk, and then you get to do what's called depreciation on the property. So basically, you look at the property and you look at the home, not the land, because the land doesn't get depreciated. And what you do with residential real estate is that you divide the amount of whatever that home is by 27 and a half, and then you actually get to deduct that amount off of the income that comes in. The other thing that you can do is what's called a cost segregation. And cost segregation looks inside of the home, and this is kind of difficult to do, not your average investor does this, but basically you look at the things in your home that are going to wear out, or in your investment property that will wear out a little bit quicker.
Appliances, mechanicals, things like that.
Yep, and ceilings. Really, an engineer actually has to come through, or an architectural engineer, and has to come through and kind of bless what's going to be included in the cost segregation. We actually have a partner that does this. So if you're interested in cost segregations, contact us. But you fast forward the depreciation of certain items between 1 and 10 years. So again, you're taking this income, you're deducting, you're using depreciation, and it is passive income. So this income isn't subject to self-employment taxes. So all in all, what happens is you have this income stream that is totally different than what the markets do. It is tax advantaged, and you have some flexibility to do some estate planning too. So what other thoughts or questions might you have?
I guess when somebody goes to sell their home, and everybody thinks they're going to make this big windfall of money when you sell your home, words like capital gains tax and different things like that. So what tax implications are there if you are fortunate enough to make a decent amount of money when you do sell your home?
Yep. As long as it's not greater than $500,000, there's not going to be a lot of issues. If it's your
You're out.
Really? 500,000?
Yep.
All right.
Right.
I'm out of that one.
And hopefully that'll happen. Aunt Marie maybe has a home that she bought a long time ago. But that's if it's your primary residence. Now, if this is an investment property, that's a whole other deal. You'll want to do some planning, particularly if you've done that depreciation, because when you depreciate your property and then you sell it, if you don't do a 1039 exchange to get another property of equal or greater value and do the paperwork properly, you have recapture on all of that depreciation. So you can actually pay taxes on that, which you don't want to do. So as long as your property is under $500,000 as your residential, you'll be fine. And then on your income producing investment properties, you'll definitely want to do a little bit of homework.
And some, I guess, tax benefits then of owning investment properties. Talking about some of that could help people out.
Yep. So like I said, let's just say, for instance, we're having a lot of baby boomers right now that have looked at their IRA accounts, and they've got this $400 or $500 or $2 or $3 million IRA, which is all subject to market risk. And not only that, but a lot of baby boomers are finding that they've got these IRAs that are untaxed. And a couple of things happen to those IRAs. First of all, when you turn 70 and a half, you have what's called a required minimum distribution. And basically, no matter what, money's going to get forced out of that IRA, which can ratchet up your marginal tax breaks and a couple things, or tax rates. A couple things can happen there. One, you're taking money out that you don't need to. Two, it can, depending on what your income levels are, it can subject your Social Security dollars to a higher tax rate, which is kind of goofy. You just lose flexibility. It kind of stinks. So one of the things that we've seen people do is to go into rental real estate, because that income is passive income. Passive income you don't have to pay self-employment tax on, and all that income that comes in, the first tax benefit is that you get to depreciate against it or do a cost segregation. The other thing you can do, which is kind of interesting, you mentioned that you've got a 3-year-old and a 1-year-old,
Yep.
and you own a property. Now, is your property in an LLC yet?
No.
Okay. There are some advantages to doing that. First of all, just some legal protections around yourself. But what is kind of cool is you can hire your kids in bona fide vocation, so a bona fide job
Check
for them.
the child labor laws. I guess before that, my kids
Right.
are 1 and 3, but yeah, we'll see what they can do.
They can clean things. They can. There's actually there's a sandbox in which you have to do it. Some parameters, but if you can come up with a bona fide job for your kid to do, what you'll see is that people can hire their child to go through and do some exterior cleaning, do some bookkeeping, whatever that is. And up to certain thresholds, you would actually be able to have that be basically tax-free in an LLC, not an S-corp. which is beautiful. A. B, you would be able to have your kid then invest into a Roth IRA up to the amount, which is pretty cool. When you do the future value forecasts of what a Roth IRA can do for a kid, if it's over 30, 40, or 50 years, it's amazing how potent that can be. So if you ever do a future value and say, hey, what if my kid just saved a little bit early on, they can get rich by the time they retire, which is pretty cool. So those are some basic, it's actually a pretty big deal to put it into an LLC so that you can get some legal protection, but then you can hire your children. You can do, there's a couple other cool things that you can do too.
Just to clear, hiring your children, so then you pay them whatever it is you pay them, and that becomes something you can deduct, so that helps you in the taxes. Is that kind of the philosophy that you're going
correct?
Right there?
And the key here, it has to be bona fide. You're not just trying to play games. You're actually, the benefits are that you're actually going to teach your kids about working. You're going to show them what entrepreneurship's all about, and they're going to be able to work for you and help you. The key word is bona fide.
So, is it safe to say that Ron's 1-year-old
yeah,
probably wouldn't fit that parameter?
more than likely.
Okay, just clarifying that for a wonderful audience.
Yeah, that's
Ron,
good. Yeah, maybe my 3-year-old. She's taller, so she might be able to do a little more.
put it in the cabinets. You
I
could
could,
clean cabinets.
yeah.
I've
They
heard
can
of
take
people
stuff out of
posing for
cabinets, that's for
marketing
sure.
stuff too. That's another
Yeah,
thing.
they could
we hear
do
a
that
lot of,
too.
actually.
And then again, I don't want to throw you under the bus here, but you brought up something that made me think of something else. I went to a seminar with a local real estate broker who suggested, if you can do it, when your kid goes to college, buy your house in that college town, have your kid live there as an owner occupant, which helps you with some financing options. So then you avoid some down payment requirements and things like that as an investor. While the kid lives there, they're renting it to 6 other college kids or whatever. You take that income that you're getting from the other people, fix it up, and then when the kid's out of college, sell it, use that money, and keep rolling with your kid. I don't know if you have following me there and any of the tax advantages to
absolutely.
you could do there.
A couple. So right off the bat, being able to have, you could sell it if you wanted to, or you could just keep it as a rental property. But no, that's absolutely. If you read Robert Kiyosaki's Rich Dad Poor Dad, he really got into this movement of using rental real estate for a lot of things. But a couple of cool advantages that would happen there is, one, you'd have a bona fide business write-off to go visit your son. And now you have to do it properly. And again, I just keep saying the word bona fide, which means there's a sandbox in which you have to operate here. But let's just say you were going to go visit on the weekend. And if you went in and the majority of your work hours were spent working on your property, doing whatever it is that needs to happen there. And that can be everything from marketing plans to fixing it up to doing bookkeeping and accounting, whatever that is. Then that trip, and I don't even want to start saying specifics here, but basically you'd be able to have some business write-offs. And then if you happen to spend the weekend there, as long as the majority of your work hours were spent.
So I went to St. Cloud State. So if my kid goes to St. Cloud State and I go up there and hang out and then end up at the red carpet, that's an expense that could write off.
You need to be in a bona fide business operation mode. So, but what I'm getting at here is there is some planning that can go into. You have to have it on your calendar ahead of time. You can't just decide to go. So it needs to be marked out. You need to be able to prove to the IRS. That's the negative side of it. The positive side is that you do just need to be operating as a business trying to produce profit. So my answer is yes, with a caveat of it needs to be bona fide, which means you have to do your due diligence. Because we get a lot of folks that'll be like, hey, me and my family, we want to buy property in Hawaii. Right. There's a mutual friend of ours wanted to do this. They went out to Hawaii and they came back and they're like, oh, can we write that trip off? And it's like, no. But if you were to have been planning, you had a business plan, it was a bona fide business trip, you'll see a lot of that happen. Baby boomers, in fact, owning rental real estate where they want to spend time in retirement, that can be a great idea. Doing it where your kid is in college, those are all great plans, and it flexes your entrepreneurial spirit too, which can produce income, which is cool.
We're about 5 minutes left in the show. Any points that we're missing as far as tax advantages to home ownership?
The tax advantages get kind of, how do I say this? The tax advantages are not huge, but they're there. You get to deduct your interest. What's most important is the behavioral financial impact. Having a house is a great thing because it becomes an asset. You know, a couple of the things that we'll do is we'll walk folks through, you know, when you're buying a home, usually you're trying to get as much home as you can for whatever payment you can get, and oftentimes you end up in 30-year mortgages, and which are great. But throwing some extra money towards those mortgages, once you get a little bit of cushion, we all say we're going to do that, but then we never really end up doing it. The tax advantages are nice, but the behavior of paying off your mortgage with a little bit extra towards the principal can do huge things for people. You can fast forward, take 7, 8, 9, 10 years off of your mortgage or more by just throwing $300 or $400, depending on the size of your mortgage, at it, which can not only pays your mortgage off quicker, but then when you look at the time cost of money, having more money to invest sooner because you're not putting it towards your mortgage is a huge deal. I'd also add that for folks that are thinking of retiring here, making sure that you really factor in what's going to happen with your home when you retire, but also factoring in what it means as an asset throughout your whole life, and even estate planning is important. There's some great things you can do with property or homes when it comes to multi-generational wealth planning.
Which is important now, right? Because college kids aren't getting jobs, so they're moving home. Your parents are living longer, and maybe they didn't plan properly, so they're moving back in with the kids, so you're kind of getting it on both sides of the generations.
Yep. I can't emphasize enough, we're about to see a movement of people with the baby boomer generation just deciding to retire. And I think there's great opportunity for real estate agents too, looking for single level homes or whatever that is, or downsizing and then somebody else buying this house, because the baby boomers are about to just do different things. They're watching their parents pass away now at a very high rate, and there's a lot of planning that I would encourage people to do. We do tax and kind of the Dave Ramsey 7 baby step planning. If there's any people out there that just want to sit down and say, how do we build a good tax plan, including real estate in that, we'd love to talk to you. If you're a realtor and you want to have a dialed-in long-term tax plan, or like the idea of having a bookkeeper and accountant help you focus on your business, we'd love to talk to you. nuancefinancial.com. nuancefinancial.com. Should I say it 5 times?
Say it as many times as you want. You can also find, we'll have the information,
of course,
on our website as well, TwinCitiesRealEstatePros.com.
And there'll be a hot link as well in the actual description of the podcast and the video. So click on the hot link, take you right to Nuance, so you can see Rob. And
do I have one more minute here?
Oh, you've got about a minute and a half.
All right, cool. So I'd also like to plug the Imperial Home team. I purchased my home with you guys.
I forgot all about that.
That's you guys already had them on here. Right? Who cares about finance?
No, I really want to emphasize, because we have so many realtors, I tried to spread the love, and I had one company list mine, and they did a fine job. But I had you guys help me purchase, and I cannot emphasize enough how good Aaron Vang was on the lending side. Your team with helping me identify just the right properties, the tempo. You guys also put in some discipline into the process. I can tell that it's hard being a realtor, and people get excited about homes. It's like, well, let's sit down and let's get real. Get pre-approved first before we go drive all over town and do a couple other things. But I gotta say, you guys are a stand-up group. We trust you entirely. We recommend people to connect with you for homes, and I really appreciate that. And I know your hearts are to help people be wise in this transaction. There's no question that you have the best interest of your clients. Obviously, you make some money when it happens, but that's what's so great about a realtor, is that they're out there to make sure you get top dollar for your property, or to help you be as shrewd as possible. I mean, that the inspector you guys had us have was amazing. I saw a couple other people sell some properties whose inspector was not as good, and I know our inspector empowered us to make the right calls. So thanks for what you guys do too.
Oh, thank you for working with us. Appreciate it.
Yeah, we appreciate all the information. So once again, how can people get a hold of you?
nuancefinancial.com. That's nuancefinancial.com. And you can call our office at 952-892-7723. So it's 892-7723. And reach out.
I appreciate you joining us, Rob.
Thank you, guys.
10 seconds, the floor is yours.
ImperialHomeTeam.com, TwinCitiesRealEstatePros.com, and ImperialHomeTeam.tv, our YouTube channel.
All right, so you can listen to us on the podcast available on our website, TwinCitiesRealEstatePros.com. It's out there on SoundCloud, or also check us out on YouTube, imperialhometeam.tv. We'll